Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Tuesday, the 24th of February, 2015. Hope you had a good trading day. It was one of the narrowest trading days we've seen all year. The ES was stuck in about a 6-point range for the entire session. We will look at that in a moment. It was certainly not exciting. Let's start by looking at the ES front-month futures daily contract. That's what you see right now. And we do have a 13 sell signal from about 6 days ago. We're approaching we had a very flat week last week until the rally Friday afternoon on rumors that there might be a resolution to the Greece situation. Other than that, it was a very narrow week, as we discussed over the weekend. And so we've got this pink risk line from the 13 sell signal that's basically what should contain the market from that 13 sell signal. If you break above the risk line, close above it, and then push higher, you're going to break the risk line in a manner that should actually propel the market significantly higher. But for now, we're trapped under that risk line. It really feels like ever since the sell signal, the market's just run out of gas, and that's what it's supposed to be. It's an exhaustion signal. So we're kind of waiting for the rollover here, and I don't know what the motivation is going to be. So far, the volume since that point has been light. It looked a little bit improved to start the session on Monday. We were trading much better than the start of the days last week. But in the end, we ended up at 1.6 billion shares for the session. It's the same as Friday. It is better than Tuesday, Wednesday, and Thursday of last week's shortened week. The 10-day moving average right now of NASDAQ volume is right around that same number, 1.64 or so. And that's light. This time last year, we were, let's scroll back and look at February of last year. By the late February, the NASDAQ average volume was still around 1.85 billion shares. So we're a couple hundred million below where we were at this point last year, and that's not quite what we like to see, but it is what it is at this point. Here's a look at the S&P cash index. Nothing really new there. The S&P down just like 4 days last week. It was up or down less than a point, and then Friday it was up. On Monday it was down 0.64 points. NDX was up 6.5. New closing highs on the NDX, and if you would allow for a sound here, we just completed a 9-bar startup phase to the upside, so that's another sort of semi-exhaustion warning. Not as strong as the 13, but it is a signal as well. Here's a look at the SOX index, which lost 4 after making new closing highs on Friday. Here's a look at the biotech index, gained 18 new closing highs there for sure. Google down almost 7 points after rallying the last week or so. Apple to new highs, up 3.5 points. The VIX gained 0.26. but still sitting near the lows of the year. Crude oil rolled over and dropped again, closing at 49.30. So again, we're back in the 40s on crude oil, and gold was down a little bit as well, continuing its decline. We'll be watching that red line on gold to see if that becomes a support level at the static trend line. All right, back to the futures contract. So a couple things to note. Here's the ES on the 5-minute bars. We had a 13 sell signal on Friday at the close on the ES, and then you can see that we came down from there, obviously. We did not fill the gap. We gapped down Monday morning. The whole day was just so sideways and flat, right on that flat VWAP. Just never got going anywhere, either direction, in a 6-point range, which is about as miserable as you can get. But we didn't quite fill the gap, so that 13 sell signal Friday was important. And then here's the NASDAQ side, just a little different. But the key here is, notice how we had we got to bar 12 back on Friday, and it took all day Monday till we finally made a new high by a tick or two to get the 13 sell signal, and then that rolled us over. And then we rallied in the last few minutes of the day. So all within the range of the day. So again, a very flat session. It actually messes up our scans because the market has been so flat for the last week. If I go back and put this in 10-minute bars on the ES, what you're going to see is that this is starting. Remember, last Monday was a bank holiday for President's Day, so this is starting from the prior Friday. And then you've got Tuesday, Wednesday, Thursday, all of them so flat. Friday, a little gap down, but then a rally on the Greece rumors, and then back to flat today. So the market's waiting for something. There's a lot of exhaustion signals and things pointing to the downside in place, but they're not yet coming to fruition. We will wait and see if and when that they do. As for now, I found a few less stocks on my scans than I usually do, and that's because the market has been so flat. It ruins the scans to a certain extent. But we will do what we can. We did have some nice minor winners, at least. No big losers at all. Actually, no losers on the session with market direction on Monday. So it was a good start to the week despite the poor action in the market overall. We'll be in the lab helping you make money. Charts, as usual, brought to you by eSignal. Have a good trading day.